Well, all right, you guys. Um, lucky, and I wish everyone a Merry Christmas, Happy Hanukkah, and uh, and Happy Holidays. I am going to do, I hope, more than one video. I have a list of stocks that you and I went down, that we went down together on the 28th. And we have basically Tuesday, Wednesday, Thursday, Friday. I think that's going to be, I went the wrong way. Tuesday, Wednesday, Thursday, Friday. I think that's going to be a half day. So we have about 3.5 days to buy stocks, which I think could make nice trades next year. I can't tell if this is quite working, but we'll find out. Forgive me, it's a new phone, new setup, all those things. But anyway, my number one, well, let me be clear about something. Look at all these names here. I've got Finger and GTII on it. I've got several others. You all should probably also just think through the stocks which you're very close to or which you know all about, and you can tell that there's been pressure at the end of the year. And trade those because you know them. But these are the stocks I know the best right now. All right, so the January effect. That's what we're trying to catch. It may not work. It doesn't always work, but it used to. Like clockwork, it worked. The trick was, should you buy at the end of November or at the end of December? Well, we don't have a choice. The only time we can buy now is at the end of December. So it was the January effect was first noticed by Sidney Wachtell. And it's interesting. I believe I met him when I was young more than once. I believe I interviewed with him. But Wachtell Securities was over very close to the White House, and it may still be there. And I think his daughter used to attend a lot of meetings. But anyway, he was the first to notice this. The January effect was first noticed by investment banker Sidney Wachtell. This is from Forbes, dated 12/23/23, Forbes magazine. During his studies of market returns going back to 1925, he noticed that stocks tended to see greater gains in January than any other month. And then there's a lot of reasons why it might occur, but the one that I'm focused on right now is taxes, combined with aggressive counterfeiting of shares that we've been focused on for quite a while. Okay, so on the theory of taxes, one is that the January effect was the logical outcome of year-end tax loss harvesting. As investors sell losing positions for the tax benefits in November and December, downward pressure lowers market prices. And when you combine it with the constant drip, 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 drip of the shares which operators sell without locating and the regulators do nothing about, prices can get quite depressed. Then, after November, December, investors repurchased their positions in January, driving prices back up. So that's the theory. The other reasons why, the other reasons why the stocks may go up is year-end bonuses. It's also when institutions look at new ideas and their salesmen put a pressure on, and etc. It may or may not happen, but let's see if we can have a trade. Now, my idea is not to say get out of this, get out of that, get out of that. The idea is let's see if we can have a short-term trade, which then you can take those profits, take them out of the market, or maybe go into one of the stocks that we follow more closely. Okay, my number one bar none trade for the next 3.5 days is to try to buy Logiq. The symbol is LGIQ, and it's a shell. It's a shell. It is not a company. Well, sorry. Let me rephrase that. It is a company. It's all timely filed. It's got the requisite number of shareholders. It's got a balance sheet such as it is, but it's something that an acquirer can come into, take the cap table, take the balance sheet, take the current filings, take the good standing, and suddenly be a listed company. So it's Logiq, but it's the Logiq Shell. All right, so let me show you the stock price. Here's Logiq over the last 3 years. And you can see it started high. And I'm not going to go through the various financings where Wall Street could take advantage of shareholders with regulatory oversight being completely absent. But here's this longer term trend, sort of. Let's look at that. That's in the, I don't know. It's a big trend. The meat of it is 25 cents. But do you see these 3 spikes here? 1, 2, 3. Those are in the 80 cent range. And right now the stock closed, according to this, at 3.5. I didn't look it up for the exact close. When you and I were looking at these stocks last week, the price was lower. It was 2.5 cents. But anyway, let's say it's 2.5, 3, 3.5, 4 cents to get into Logiq over these next days. My opinion is the stock's going to go higher come Tuesday, Wednesday, Thursday, and Friday. So I would think about it tonight, maybe Christmas Day, but I wouldn't wait necessarily until the last day. I could be wrong. Lots of times the cheapest price is on that last day. I don't think it's going to be that way this time. Because I'll tell you why. So anyway, on the longer term, I think 25 cents is where it'll trade. In and around there. Look at all that accumulated selling pressure. In other words, what do charts tell you? Charts tell you where people bought the stock. And when it gets back to that level, they're going to go, I want out. I want to break even. And they got the CAUD shares. The other thing to notice on here, though, is if the shorts, both legitimate and illegitimate, get caught out and somehow the stock breaks through that 80 cent level, you could have a short-term run, and I'm not saying this is going to be a huge squeeze of all ages or anything like that, but you could have a run here to 2, 3, 4. But I emphasize, this is a trade. Don't get all caught up trying those high, in other words, take your money off the table as it goes up and hold some for a little bit higher. Okay, that's that chart. This chart will show you Logiq in the very short term. And here is where the Aubrey de-SPAC occurred. So we were trading in these prices. The de-SPAC occurred, and look at that, collapse. There was also the financing with the Aubrey SPAC and the group at the recommendation of Chardon and Polar LLC, or whatever the hedge fund is called, Polar. Well, they just sell it off. But there was also selling going along here because this Logiq is a shell. And so there were probably legitimate shorts saying that, the company's giving all of its revenue, all of its earnings, the engine, the AI, to Aubrey SPAC, which is now called Collective Audience. So what's left? It's just a shell. So they sold it off. Well, anyway, let me read some of these prices. It went from, you could buy the stock all day long from June, July, maybe back before that. This chart just goes back to July, in the 20 to 25 cents range. And then for September, October, you could buy it in the 14 to 22 cent range. And then once that Aubrey SPAC, de-SPAC occurred, man, essentially once the Polar financing got done at all, it's 2 or 3 hedge funds. They just drove that down in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days approximately. They got it under 2 cents. And just for the record, when that financing was put in place, I both predicted they would take this stock to 5 cents, and then I said they'll probably try to get it to 1 cent. Well, they didn't get it to 1 cent, but they got it under 2 cents and pretty close to a penny. The reason I bring that up isn't pat on the back. The reason I bring it up is my theory of what goes on. And when I say I'm just trying to take responsibility. I don't want to blame my thoughts on anyone else. But this is Ham's message and many other people's message about what goes on in the market. So I'm not trying to claim any kind of uniqueness. I'm just taking responsibility for my own views. But my theory predicts, and it accurately predicts, the apologists and the credulous who say, oh, there's systems in place, good clients, the number, all the other excuses. Their theories don't predict diddly squat, as the grocer, I guess, the woman sold some goods to Josie Wales said. That doesn't mean doodly squat. So anyway, they took it down to under 2 cents. It rallied back in the 3 cents range, got up to 4. They brought it back down into the 3 cent range, got it back down to 2. It bounced between 2 and 3 and 2 and 3 and 2 and 3 and 2 and 3. And then on Friday, and 4 over the last week, but on Friday, it got up over 4. And it closed, let me see where it closed. $0.04. Closed at 3.5 cents. But I think we should use 3.5, 4 cents on it. And anyway, those are the charts. Now, I want to call your attention first to what is a reverse merger. What is a reverse merger? Why are shells attractive? What is a shell? A shell company that looks good and would be desirable to a private company to buy is one which is current in its filings, has a number of shareholders, usually over 300 distinct, more than 100 shares each. And it has, ideally, a track record of filing so that as soon as the new company buys it, within weeks, it can be trading on a major exchange. And that's currently, that's not only attractive to avoid the delays of the IPO market. The IPO market is sluggish at best. So in many ways, this is the only way for a company to monetize. That's the wrong word, to float, to provide an exit for some of its long-term investors and key employees. Okay, so the mechanism that we're talking about is a reverse merger. And part of this definition does not apply, but it is what's happening. A reverse merger occurs when a smaller private company acquires a larger publicly listed company. That is not exactly what's going to happen here, but it's the concept. And that's why it's called reverse, because it's a minnow eating a whale. But that's not what's happening here. The standard path, by the way, this comes from Woodruff Sawyer, a law firm.com. Woodruff Sawyer. Why would a company undergo a reverse merger? The standard path for a private company going public typically involves an initial public offering, an IPO, which is often complicated and it's also takes time. The IPO procedure usually involves hiring an investment bank to underwrite the financing and issue shares, along with an extensive due diligence process, a large amount of paperwork, and regulatory reviews. Just think of anything we've gone through recently, from MMTLP to close to home on this stock, how long it took for the SEC to approve the Aubrey deal. Over a year in both cases. It is common for the process to involve acquiring a small-scale public company with a relatively low level of operations. And that's exactly what Logiq's become. It's got a CEO, it's got a bunch of suitors, and it doesn't have much anymore. It does have some shares of Logiq, but it doesn't really move the needle, as they say, so we won't focus on that. It is common for the process to involve acquiring a small-scale public company with a relatively low level of operations. Although the public company remains intact after being acquired, the owners of the private company become the controlling shareholders in the shell. It doesn't use that word. This is generally followed by a reorganization of the company's assets and operations and a new board of directors. We don't have to concern ourselves with any of that. Okay, the first phase of the reverse merger, you have to get 51% of the company or more. Well, in this case, the whole thing's for sale anyway. It doesn't matter. There's no immediate capital raised at the time, and it speeds the process for you Canadians of being publicly listed. Now, what are the advantages? Here's the advantages. But cheaper process, less risk, and then you become a public company for whatever nightmare thought process you have that you want to get into the United States public markets. But many companies do. And the key thing is timing. Compared to conventional IPOs, which can take several months to complete, reverse mergers can be finalized in just a few weeks. In just a few weeks. So there are disadvantages, and one of them is difficulties with regulators and compliance. Well, in the case of Logiq, everything is clean as a whistle, and you know that, we know that, we've been following it for a while. The other risk here is, of course, the legitimate shorts, the criminal shorts, and opportunistic day traders. Okay, that's that. I'll save this. I'll show you this when I do CAUD. But this is all of the companies that make up Logiq. And Logiq was given to Aubrey Spack out of Logiq. That's why Logiq is a shell. Okay, let's go through a few things, and then I'll get to my recommendation, and we will sign off. It's been 22 minutes. Wow. I wanted to make it 22 minutes long, so let's see if we can do it more quickly. I want to get into your message that Logiq has 143 million shares. That you can go to OTC markets. 143,855,621 million shares as of 12/18. Logiq is not trying to raise money. As much as the criminals short it, they're not going to issue any more stock. There's just nothing here to be worried about. They can play their reindeer games, but to know to what event. Here's the short interest in Logiq over the last month. I don't have the full record because I haven't followed it, but what's interesting in all of the FINRA data, it's all tightened up. It's in all stocks. It shows a much lower percentage of shares shorted over the last, I don't know, few weeks I've been looking. And I don't know if that's because the reporting is done differently or the shorts just aren't shorting as much. But looking at it on Friday, the volume was about 360,000 shares. Half of that was shorted. On December 15th, it was 663,000 shares. Half of that was shorted, and so on. So there's a large short position in Logiq Shell. Okay, on October 25th, Logiq announced that the stockholders have voted to approve the previously announced pending merger transaction of Logiq's digital marketing subsidiary, Logiq, DLQ, with Aubrey Spack. The vote was conducted on the shareholders meeting on October 23rd. We can leave that discussion for another video. And this, I just give you this as proof it happened. And then on August 25, which was before this vote, Logiq announced major corporate initiatives. And before I go to that, I want to point out that in January of last year, well, this year, it'll soon be last year. Well, no, it was last year, sorry. It was 12/22/23. Logiq made a press release 1 year ago, and it said, Logiq signs an LOI to acquire a privately held operating company. It's actually the other way around, but that's all right. This was written before the DSPAC. The preliminary confidential target valuation is worth between $220 million and $250 million. The transaction would be executed simultaneously with Logiq's pending Aubrey DSPAC deal, whereby the confidential target would be acquired to become a wholly owned subsidiary of Logiq. That's the reverse merger. Properly structured, post-transaction, the combined entity is expected to apply for NASDAQ or NYSE uplisting and complete a significant capital raise by the end of the year. That was called PrivCo. That was a year ago. The key there is to remember $250 million. I'm using the high number. So then, in August of this year, Logiq announced that they're updating shareholders, and they wanted to update on progress for you Canadians, with a number of major corporate initiatives, including its pending merger transaction with Aubrey SPAC. So they announced their results. The quarterly results were up 37% sequentially, up almost 50% year over year. And they brag on their platform. And then I forgot to point this out to you, but just remember this side point for collective audience. It no longer applies to Logiq, but just for collective audiences, a point. In August, they expected the revenue run rate on an annualized basis, which will be for CAUD, 70 million. I think, anyway, we'll talk about that in another video. Okay, so post-SPAC plans. The company believes the currently struggling IPO market increases the attractiveness and value of publicly reporting companies like Logiq, and particularly for M&A candidates looking to access the capital markets. The previously announced merger, exclusively offered to the PrivCo, announced in November, expired on December 31, allowing Logiq to pursue negotiations with other potentially more favorable private companies looking to go public. The ideal target would enable Logiq to qualify for a listing on a senior stock exchange. Management is currently in late-stage discussions with several target companies who are greater in valuation than the aforementioned PrivCo. So that was in August. So just to recap, PrivCo, $250 million. I'll tell you what I know about the second company. It was rumored to be worth between $500 million and $700 million, maybe $750. But that one too was allowed to expire. Not so much intentionally. The lawyers for that company took a long time getting the documents together. They signed the agreement, but by that time, as Brent has said on a couple of calls with you guys and me live, that other companies showed up who are better. They're better. So, all right, let me just check to see if I've given you everything I want. I have. All right, so what does it mean for you? What does it mean for you? Let's go first with what the value could be. Let's pick $650 million company. $650 million company. I've heard it could be as big as an $800 million company. I have no specific knowledge. So let's just go conservatively. Now, the range of ownership for us will be 10 to 15% of that company. Now, part of the vote that you all participated in, I did as well, is a reverse merger. A reverse split. This is different than a reverse split trying to not default on a toxic convertible note or trying to remain listed. This reverse split will be effected at the time of the acquisition of Logiq by this new company. However you want to phrase it, that's basically what's happening. Shareholders will be left with 10 to 15%. Why does that matter? Our 10 to 15% won't be a penny stock. It'll probably be a stock anywhere from 30, I don't know. It's going to depend. But let's say from $25 a share to $45 a share, trading on the New York Stock Exchange or the NASDAQ. I hope it's the NYSE. It'll have institutional following. It'll have revenues. It'll have earnings. And it'll have a big valuation. And I don't think the criminals are going to be very effective in shorting it down if it's listed on the NYSE. The NASDAQ is 50-50, probably a little bit weighted in favor of the criminals because Adriana Friedman does nothing for CEOs or retail shareholders. She just collects her $28 million a year. But anyway, all right, so if we just use the low end of this number, and you can move that number up, you can use a higher range here, but if we use 10%, that means our starting valuation is $65 million. And if we divide that by 144 million shares, it's 65 million divided by 145, it equals to basically 45 cents a share. 45 cents a share acquisition. Now you can I'll give you the number, 4483. If you use 10% of that, it comes out to 4483, 45 cents a share. Now, I think it could be a higher number. It could be a higher percentage, so that could be low. But anyway, right now, Logiq is trading for 3.5 cents, 4 cents. Let's just say you buy it at 4.5 cents. This is the target, 4.5 times 10. That's right. If you buy it for 4.5 cents and you get 10x, it's 45 cents a share. Now, going back quickly to this chart, this is a trade, and I think the short sellers will be active trying to suppress it. On the other hand, they've got to cover if they want to protect their profits. And I don't want to say for sure how the street will handle it, but ostensibly they're going to have to deliver real shares. So you could get a buy-in pressure that runs the stock once this merger happens, this reverse merger happens. Now, what's the status? I think they already signed a letter of intent. I don't have any information directly from the company, but I think they already signed a letter of intent. What does that mean? That means the number two company has been, which the lawyers signed all the documents, that one's been kicked to the side because this is better. I think had Brent decided to, he could have made an announcement, but it would have said non-binding, and that wouldn't have pleased anybody. So my guess is they're doing an audit, and they've been working on an audit, and it shouldn't be hard. Logiq is an open and shut book. This company that's coming, whoever it is, obviously prettied themselves up for sale, so it shouldn't take very long to look at the books. If it's already been going on for 2 or 3 weeks, I would imagine you could get news on this in January. What's the risk? It could take February, March, but it's going to happen. Logiq Shell is going to be sold. Logiq Shell is going to be sold, and it's not a question of if, it's just when does it finally get announced. I think you can get an announcement in January. Well, if that announcement comes out at 45 cents, where does the stock run to? Well, in the short run, there's a gap here, I would say that, but you've also got these moving averages here and this gap. So I will give you those numbers. 8 cents is the lowest moving average. The gap is around 16 cents. And then the 200-day moving average is at 25 cents a share, 25 cents a share. Okay, now this longer term graph, I think shows that at 25 cents, give or take, there is a lot of resistance. In other words, there's probably going to be a lot of people that say, just get me out. See this gray line I drew there? It's 25 cents. The 3 points of rally could be pierced, and that's around 79 cents. But let me read significant upside. We're right now at 3.5, 4. Same numbers as here, 8. I think 12.5 cents could be initial target to try to pull back from. And then 20 cents has a little bit of resistance. 25 cents has a lot of potential selling going on. If you get through that, it's very hard to read this, but I would say it's 45 cents range would be another kind of top area. And then, as I already said, 79, 80 cents. So there it is. This is almost 40 minutes. My number one trading recommendation, trying to take effect of the suppressed price in December for tax loss reasons, but also the funds and in the cheaters, I think, who have to show their investors their records. It's the end of December, it's the end of the year. So they keep that price down. Just on its own, the January effect, I think you could see the stock rally in January. But the biggest thing is Logiq the Shell is going to be purchased. It's going to be purchased. And it's going to be purchased by a company maybe worth $750 million, listed on the New York Stock Exchange or NASDAQ. And we're going to have our shares. So it'll have a story. It may be a great story. You may want to hold it all the way through, but that's not why I'm recommending it. I think for a trade this coming few days, even a small amount, if you took $400, you could buy 10,000 shares, $400. And if it goes to 25 cents, it's $2,500 in January. If it goes to 50 cents, $5,000. And that's the kind of trade, pays for some of the Christmas and all that. You can do more if you want. I bought some on Friday, and I bought some the week before and the week before. So I would like to see this work. Timing, again, I think it really comes down to the audit. And if I had to guess, that audit's in full gear. So you could get an announcement as soon as Martin Luther King's birthday, but maybe shortly thereafter. And so that's the time frame. I believe the announcement will be a definitive deal. We'll be able to calculate the price per share. And the shorts, what are they going to be? If they want to keep selling, what's their strategy? Because it'll be almost immediately effective. Almost immediately effective. And how are the shorts going to fight a New York Stock Exchange listed company or NASDAQ, which is $25, $30, $45? This could be a pretty exciting trade. All right, I'm going to leave it there. As you know, everything I say is my opinion, and it's not financial advice because I don't know you individually. I wish each of you a prosperous new year. We'll be talking, and I'm going to try to go through some of these other stocks, but I do wish you a prosperous new year and a Merry Christmas, Happy Hanukkah, Happy Kwanzaa, and just an enjoyable time over the holidays for all. So, cheers.